Okay, welcome back. This is the Lab 4 challenge, so Lab 4 review rather, and it's labeled as Financial Statement Challenge. So here we're doing pretty much the same as the regular question, except now we've been in business for 2 years. So we began operations with Gulf Corp 2 years ago, and the adjusted balances are shown at July 31st, 2014, and it tells us that Gulf Corp issued shares worth $8,500 during July 2014. So once again, we start by putting in the appropriate information at the title. So Gulf Corp, and both the statement of changes in equity and the income statement are for the year ended July 31st. And Gulf Corp has a balance sheet as at July 31st. 2014. So just as we've done in the past, we should fill in some headings. So on the income statement, that would be revenues, and then total revenues, and then some expenses, and then total expenses, followed by net income. And on the statement of changes in equity, we start with the balance at the beginning of the year. Whoops, that's the beginning. At the end of the year, we want balance July 1st. Then we're going to issue some shares. Then we're going to have some net income. And pay some dividends, giving us a balance at the end. On the balance sheet, we have the asset side, followed by current assets, and then we need a total current assets, and then we need property, plant, equipment. We have that as heading, yes for you, and we need to give ourselves some room here. Okay, then we'll have a total property, plant, equipment, and that will be followed by long-term investments, and then total long-term investments, followed by intangibles, intangible assets. Okay. And that will be followed by total intangible assets, followed by total assets. Over on the other side, we'll start with liabilities, and then we'll have current liabilities, and then we have total current liabilities, and then we'll have long-term liabilities. There we go. And then we'll have total long-term liabilities. And then we have total liabilities, followed by equity. And then we have total equity, followed by total liabilities and equity. So that should be all the pieces. Now let's just put all of the pieces into their appropriate places. Give ourselves a couple of lines to fill in some expenses and some revenues. The issuance of shares, we know that at the end the share capital is 13,640, and it says that we issued 8,500 during the year. So that means we must have started with something other than that. So if we take the 13,640, and remember with the shift and the arrow keys, you can move this box out of your way. And we can subtract 8,500. There we go. We started with 5,140. Now the retained earnings number that we see, 8840, that is the balance as of the previous period, because it's got all of these temporary accounts. All the revenue and expense accounts are still there, and they're still open. And the trial balance presumably balances. We don't actually have a trial balance here, but all of the adjusted accounts are there. So that means that we haven't actually closed net income yet. So we can start by adding these two together. Our opening total equity would have been 13,980. Okay, so let's see what we can do. Let's start with let's do some income. We have revenue for commissions earned and revenue for consulting revenue, and let's pull both of those amounts over. Okay, so commonly rent earned as well, so let's grab that and put it in here. Okay, there we go. So that should be all the revenue. If we quickly scan down, we don't see anything else that says earned, so that's good. Now we're looking for expenses. We have depreciation expense on the equipment and depreciation expense on the machinery. Let's pull those numbers in. And in this year, they're not actually the same as the accumulated depreciation because this is our second year of operation. We're going to need some more room, a couple more expenses here. We have interest expense for $37.50, and then don't forget to cancel it. And then further down, property taxes expense, and that's $51.60. And rent expense for $10,840. And that looks like all of the items on the income statement. So let's finish that off. Add up all the revenue numbers. Add up all the expense numbers. And then take the difference. And that number is going to be the net income which we have here, which we can drag over there. Drag the 8,500. And the dividends, we have that number as well. It's 1840. Of course, we need to make that into a negative number. And then let's do a little math. And we can add up the column. And then let's check it by adding 15,640 plus 9320, and it agrees. And let's delete it right away so that X doesn't get upset with us. Okay, so now we have the balance sheet. So let's scroll up a bit. We have a couple of different kinds of current assets, so let's give ourselves a little room there. We've got accounts receivable, usually the second one, so we'll put it in the second slot here. 6040. And then we have cash for 3120. And as we scan down, we've got a bunch of long-term assets, but no more short-term assets. So we can add up the current assets. And then let's start with property, plant, and equipment. We need at least 4 spaces plus land. So here we have equipment. And then we have accumulated depreciation on the equipment. And then we have machinery. And accumulated depreciation on the machinery. Oops. Okay, that wasn't supposed to happen. Let's go back up and get the machinery heading. There we go. There we go. Okay, so now we need some numbers. Accumulated depreciation is 4360 on the equipment. And it's 1730 on the machinery. We click both of those off. The equipment was 12,020. That's the cost of the equipment. So the difference between those two would be the net book value, as we discussed in class. And the machinery, we already have that, 12,440 is the amount, meaning the net book value is 12,440 minus 1,730 for 10,710. And of course land also, did I pick up the land? Land also fits the category, and its value is 17,260. Click land, and then let's add up the total plant and equipment. Okay. Long-term investments, we have one account, long-term investment in shares, and it was 5,200, which of course is also going to be the total long-term investment in shares. Okay, how did we do that? We want this to be there. We need to get rid of that. Okay, and this number should be below. Okay, so we have long-term investment in shares 5,200 on its own line now, and long-term investments total is 5,200. We have a couple of different kinds. So we have machinery. We have a couple of different kinds of intangible assets, patents and trademarks. So patents for 3390, and a trademark for 5670. Okay, last one there. Oops, didn't mean to do that. Try that again. So that means our total intangible assets are the total of those two. And we can get a total asset number now. $35,630 for the property, plant, and equipment, plus 5,200 for investments, plus 90,60 for the total intangible assets. Okay, so now we can go over to the liabilities. There's a couple of different kinds of long-term liabilities, and I'm not sure how many current liabilities we have. Bonds payable would be a long-term liability, so we put that here for 11,620. I picked up the wrong one somehow, so let's grab the right one. 11,620. And there's also a long-term notes payable, and that value is 11,450. The long-term investment in shares we already have taken care of. It's an asset. Property taxes payable would be presumably a current liability because it would have to be paid within the next year. 4290. Rent payable would also be a current liability for 5,010. Then we have short-term notes payable, so we have to give ourselves a little bit more room. Short-term notes payable would also be current liabilities for 3720. So now we can add those together. And we can add the long-term liabilities. And then add the total liabilities. And then equity. We need two slots in equity. One for share capital. I wonder if it'll allow us to do that. Look at that. Okay, so the share capital was 13,640. Retained earnings was 93.20. The total equity was 22,960. And let's just check to see whether this balances. We already have total liabilities here, so we can add in the total of the total liabilities plus the total equity. And we have a problem in that it doesn't balance. So let me see if I can figure that out, and I'll get back to you. Okay, so one of the ways to check to see what the difference is just take the difference between the two columns. So let's try that one, 66,710 minus 59050. Now, if this is divisible by 2, which it is, it's possible that it could be something that was posted the wrong direction. So if you divide by 2, that might help you see a number that might be of some value. Another thing you can do is you can take the 7660 and divide it by 9 and see it comes out as an inexact number. If it's divisible by 9, that means that you transposed the number somewhere. So in this case, we actually see that I've added in the 7660 right there, but then again in my total assets here, I've added 9160 plus 7660 plus 35630. So the 7660 shouldn't be there. Let me take that out. And now it does balance. Let me get rid of the evidence here. And our balance sheet balances. We've got all the headings. We've got all the totals. We've got all the titles. Should be good. So let's see what Lyrics thought of our efforts. It didn't look our year ends. And it does say for the month ended July 31st here. So I'm going to assume that you can handle the that difference. It should have been for the month ended July 31st in both cases, for the month ended July 31st here. So I'm going to fix this for next time, but I'm going to leave it that way for now. So we're done.